Thank you, Mr. Chairman. This simply proposes the addition of a sentence to the views and estimates, and while I'm not particularly encouraged about the potential of fulfilling its objective given the soft approach that the committee has taken on fraud today, I think it is important that we have a clear understanding of this issue. In an outrageous deal between Donald Trump and himself, Trump's personal criminal defense attorney, who's at the Justice Department now, reached an agreement to never audit the tax returns of Donald Trump, his family members, or the hundreds of affiliated businesses and trusts. For the average American who's out there trying to make ends meet, sometimes paying more in taxes than Donald Trump, the declaration that Trump seems to be making is that the rule of law applies to thee but not to me. Let's just review why the committee taking this action is important. Trump paid $750 in income taxes in 2016. I expect he's left bigger tips than that. He paid $750 again in 2017. In 2020, he had a really good year. He didn't pay anything. He reported tens of millions of dollars in losses year after year, claimed hundreds of millions in credits and deductions, and in one year after another, he paid less income taxes than a public school teacher in Austin, Texas. The Joint Committee on Taxation found that the IRS responded by assigning one single auditor under the mandatory presidential review program to review Trump's tax returns that encompassed over 400 pass-through Trump Organization entities. One auditor. The audit file itself stated in plain language that, quote, the lack of resources was the reason for not pursuing certain issues on the former president's return. Outgunned and under-resourced, the auditor failed to bring in specialists, failed to conduct original document reviews, and instead relied on what Trump